Hi, my name is Malcolm Pengelly and I'm a member of BDO's Tax Support for Professionals team. Welcome to our webinar on Stamp Duty Land Tax, being one of 4 webinars in our Property Tax Update series. BDO TSP provides tax advice to accountants and other professional advisors from our long-established market-leading team. For more information on our services, including joining the mailing list for our free e-zines, please visit www.bdo.co.uk/TSP or call us on the numbers provided at the end of this presentation. Today we're going to look at what's new in SDLT. We now have 3 taxes where once there was just SDLT. We have Stamp Duty Land Tax in England and Northern Ireland, Land and Buildings Transaction Tax in Scotland, and LTT in Wales. Secondly, we'll look at the valuable first-time buyer relief. Third, not so new, but an area of continuing difficulty, is the additional 3% SDLT charge on second homes. And soon to be with us in April next year, some changes to the SDLT filing requirements. So, what are the tax rates for SDLT? Well, the slide shows a whole number of differing SDLT rates from the 1st of April 2018. There is no doubt that the rates in England, Scotland and Wales are showing a race to the bottom. SDLT starts at 125,000 in England, but in Scotland the starting band is 145,000 and in Wales 180,000. There was great fanfare when these bands were announced as to how many properties will be taken out of the scope of SDLT. Whether it will generate a rush to Scotland and Wales, only time will tell. One will also see that at the other end of the residential rate scale, the Scottish and Welsh rates accelerate more quickly than SDLT. For example, the 750,000 to 925,000 band is taxed at 5% in England, 12% in Scotland and 10% in Wales. So it's vitally important to work out where your property is actually situated when you come to work out the tax cost of purchase. Commercial rates, on the other hand, are fairly consistent across the piece, with minor variations between SDLT, LBTT and LTT. Turning to leases, again there are minor variations between SDLT in England and Wales, LBTT in Scotland and land transaction tax in Wales. Interestingly, when it comes to residential property in Scotland, leases are generally exempt and there is no LTT in Wales. One should not overlook the additional 3% charge, which we'll come on to later, on the acquisition of residential properties and those owned by companies. There is also a penal 15% flat rate on certain corporate purchases of residential properties costing more than £500,000. Turning to some good news for a change. First-time buyer relief has been available in England and Northern Ireland since the 22nd of November 2017. In Scotland, a similar relief has been available since the 30th of June this year, 2018. There is no specific relief in Wales after 31st of March. The normal LTT rates that we looked at a few minutes ago will apply. SDLT relief is more generous than the relief given in Scotland. The relief is available on the first £300,000 and can save up to £5,000. The maximum relief in Scotland is £600. In England, there is no relief at all for SDLT if the purchase consideration is more than £500,000. Like all good tax reliefs, there are plenty of conditions in order to claim first-time buyer relief. Firstly, the relief doesn't apply to mixed-use properties or to the rental element of residential leases. The first-time buyer needs to be an individual who has never owned an interest in a residential property in the UK and intends to occupy the purchased property as their main residence. There are the usual carve-outs, and certain properties won't qualify. For example, accommodation for school pupils. Where there are joint purchasers, they all must meet the conditions. This precludes relief where, for example, mum and dad are joint purchasers with their children. And as always, the relief must be claimed in a land transaction return. Moving on to the 3% additional charge. This legislation is complex. The original intention of the legislation was to impose an additional 3% liability on second homes. There's no 3% charge where at the end of the day of completion of the purchase of a property, the individual concerned owns only one property. The complications start when one has to consider if someone is replacing a main residence, because the 3% additional charge does not apply if what one is doing is replacing a main residence, regardless of the number of other properties that an individual may own. So there are two basic ways in which you can remove the 3% charge. Either you can sell the old residence first and replace it with a new residence, or secondly, buy the replacement residence first, pay the 3% additional SDLT, then sell the old residence and claim back the 3%. Let's look firstly at selling the old residence first. If the new residence purchase is on or before the 26th of November 2018, any previous main residence will qualify, provided that it was not previously replaced by another main residence. Leases of less than 7 years occupied in the interim are ignored for this purpose. Once we get past the 27th of November 2018, a disposal counts if it's the disposal of a previous main residence within 3 years before the purchase of the new main residence. And during that period, the old main residence was indeed used as a main residence by the individual. The second possibility is buy the new residence first and then sell the old residence. Most importantly, the new residence must be intended to be occupied as a main residence and bought as such. Secondly, the old residence must have been a main residence at some time in the 3 years before purchase of the new one. The old residence must then be sold within 3 years of purchase of the new residence, and again, a claim must be made to claim back the 3% additional charge. Okay. That claim needs to be made within 1 year of the filing date or 3 months of the sale of the old residence, if that is later. There are some new release from the 22nd of November 2017 which will remove the additional 3% charge. Generally, husband and wife are treated as a single unit for the purposes of the 3% charge. So, for example, if wife owns a buy-to-let and the main home, and husband buys a buy-to-let property, then the 3% applies. even if husband only owns the buy-to-let at the end of the day of purchase. The changes from the 22nd of November ensure that there is no 3% charge where a spouse or civil partner buys a property from the other spouse or civil partner, i.e. treating them as one unit. 2, a divorced spouse or civil partner is required to retain an interest in a property as a result of the terms of the divorce. This interest can be ignored for the purposes of calculating the 3%. And an owner of a main residence buying an additional interest in the same property or extending the lease will not now pay the 3%. Some couples were avoiding the 3% by transferring part of a previous main residence between themselves. Now, to qualify, the disposal of the old main residence must be to an independent third party. And finally, we come on to some changes to the filing regime. At the moment, SDLT returns are required to be filed within 30 days of the effective date, which is usually completion of the transaction. Those transactions with an effective date from the 1st of March 2019, returns will need to be submitted within 14 days. And finally, a little bit of good news when it comes to penalties for late submission of SDLT returns. The Latimer Hill LLP case brought out two very important principles when it comes to imposing penalties. The first is that the legislation is quite clear that HMRC have a discretion to impose a penalty. Therefore, something produced by a computer does not show any exercise of that discretion, and any such penalty will fail. Also, the taxpayer here tried really, really hard to get the relevant tax reference to put on his return. He rang HMRC a number of times and submitted the tax return, albeit late, as soon as he possibly could. So the tribunal judge was unimpressed by HMRC and quashed the penalty. This concludes our webinar on stamp duty land tax. If you'd like further information on our tax support for professional service, please call the numbers on the screen or visit our website. You may also be interested in our LinkedIn group, details of which are on screen. If you would like to join, please send my colleague Chris Holmes an email at the address shown. Thank you for listening.